Bill Ackman is one of the best investors in our generation, and it's always fascinating to look at what is owned by his investment vehicle, Pershing Square, because Ackman is always a very concentrated investor, takes really big bets, and 100% of the portfolio right now is in just 7 stocks. So that's really shocking concentration. The biggest 3 holdings account for nearly 60% of the portfolio. So I'm going to go through all of the numbers that have been publicly reported and show what Ackman is seeing in the market, because there's some broad trends that we can outline here. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. I'm going to start by showing the portfolio overall, because here you can see the $10.8 billion portfolio allocated to just 7 stocks. So it's top 10 holdings, the percentage is 100%. That's not very common among a lot of investors. We talk a lot about diversification, but with Pershing Square, this is a hedge fund. So Ackman is making money not only by owning part of the fund himself, but also on the gains from the fund. So does a lot of research in these names and then allocates to a very big position, oftentimes agitating for changes of some sort at management, whether that's changes in management himself or actually selling off pieces. So let's go through a few of these, because I think these are really interesting to see the correlation. And the first 2 are restaurant companies, which I always think is fascinating. The first is Chipotle. I'll just show the numbers here. You can see that this stake really was built in 2016, so a relatively long holding for Ackman, and this is about 20% of the portfolio and has been for quite some time now. Not coincidental that I don't think it's coincidental that this huge stake was taken when Chipotle was kind of down and out because of that E. coli outbreak that happened. So you saw a drop in the company's sales on a per restaurant basis, which is really how we need to measure restaurants, is how much volume, how much sales do they have going through each one of those restaurants. And Ackman saw a lot of upside there. The stock was down, very opportunistic buy, and has been holding this for quite a while and generating very strong gains. The one that I think is really surprising is the restaurant brand stake. Ticker symbol here is QSR. You can see that this stake also goes back a very long time, about 10% of the portfolio going as far back as 2014. That has been volatile over times, but this stake was then increased basically as soon as the pandemic hit in Q2 2020. And I think it's worth going through just what Restaurant Brands International owns, because this may not be quite as simple to understand as companies like Chipotle. This is a look at some of the holdings for Restaurant Brands International. You can see that the big 4, Tim Hortons, Burger King, Popeyes, and Firehouse Subs. And there are not only owned restaurants, which is something that Chipotle does. They own all of their restaurants, but they also franchise some of these restaurants. And so franchises can be a really phenomenal way to generate returns as a company. You do all the branding, you pick out the food, you set up the supplier relationships, and then franchisees actually pay you to be a franchisee. And then there's ongoing fees like licensing. So it's a very high margin business if you can build a big business. I wouldn't call these quite the same powerhouses that Chipotle is. Not quite the same big brand. Burger King, I don't think that Burger King you would say is really a hot restaurant, but obviously Ackman sees a lot of potential in these companies. And the general takeaway here is that he's very bullish on the restaurant industry. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, some of these other companies, we can start to get a general trend of what Ackman is thinking about the market. Lowe's accounts for 17.6% of the portfolio. You can see here that Lowe's stake has been held for a number of years now, going back to 2018. And Lowe's, I think, is just a company that has solid returns. They continue to buy back stock, return money to shareholders. So there's not a lot to read in here except for the fact that Lowe's is a really well-run company and it's very shareholder friendly. That's something that a lot of investors can like about this stock. Hilton Worldwide is an interesting one to me. This is really more of a brand company. It's a hotel company, but they're doing more of the branding and the technology behind these hotels. They're not actually running independent hotels. So much more of that franchise model like we talked about with restaurants. And you can see that the holding has fluctuated over time. Increased in 2020 when we did have that pandemic and you had a lot of downturn in the hotel industry, and then has been reducing that exposure to Hilton over the last couple of years. but still obviously a very big allocation to the Hilton brand. Kind of tied to this, and an interesting holding I thought was Howard Hughes Holdings. Now, this is marked as HHC. It should actually be HHH, is the stock that Ackman holds. But this is one that has been built up basically since the pandemic, just allocating a huge amount of money to this company. And what exactly do they do? They are a developer of all kinds of real estate assets. So they have assets all over the country, and they're building all kinds of different things: master planning, homes, offices, retails, community. I think of this as just giant developments, master plan developments. And this is obviously something that Ackman has been very bullish on. You can get the sense why. Especially housing is something that has just increased in value because there's a ton of demand, especially for areas where you're going to have a concentration of people and businesses. That's the kind of thing that Howard Hughes Holdings develops. So there's a lot of potential upside there. If we just go to the key facts that they have for investors, there's also a lot of optionality for development. 36,000 acres in the land that they could develop, and historically a 9% yield on cost. So when borrowing money is 4 or 5%, generating a 9% yield on real estate is pretty attractive returns. Lots of multifamily units, lots of retail units, lots of office space. And here's another reinforcement of why Ackman is excited about a 21% historical return on equity. So you can see why he likes that company. And the final position is two stocks, but actually one company, that is Alphabet. And Ackman owned both tickers GOOG and GOOGL. In total, they make up a little bit less than 15% of the portfolio, but these are actually the newest positions in the portfolio. Ackman has been buying these over the last couple of quarters. So I think this is, again, another telling position about where Ackman is seeing growth and opportunity from an investment perspective. This Alphabet is actually a stock I've been buying as well because it's one of the cheapest big tech companies, and I think has one of the bigger moats out there. They've obviously got the search business, but there's also a lot of optionality. We've seen improvements in their artificial intelligence products that they've launched just in the last couple of weeks. You have Waymo. There's a ton of optionality with YouTube, where you're watching this here, and creator and content from other creators, aggregating that together, providing advertising against it, but then also becoming a go-to platform for bigger media companies. They have a deal with the NFL now. We have the NBA media rights coming up next year. I think Alphabet and YouTube could play a role in that. So a lot of growth opportunities. And I think Alphabet is arguably one of the best tech stocks to buy right now. And Ackman seems to agree with that. But looking at this portfolio overall, only 6 companies and 7 stocks in the portfolio of over $10 billion. Really big allocation to restaurants with Chipotle and Restaurants International. Lowe's and Hilton are 2 companies that he's held for a very long period of time. And then you have holdings like Howard Hughes Holdings and Alphabet. These are newer holdings in the portfolio, but you can see why those might be attractive. So I think it's interesting to look at Ackman's portfolio because he makes such high conviction bets. But what did you take away from this? Love to hear your comments about Pershing Square's portfolio and what Ackman is thinking. Leave those in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.